Should you buy a car on finance or cash, and if so, why? This question arrives in your mind at the time of buying car. For some potential car buyers, the decision of whether to buy a car with cash or finance can be confusing. Obviously, some buyers are unable to purchase their dream car with a cash payment. You will need to discuss your finance options before purchasing a car. The average price of a car in Australia is around $40,000. Even if one is in a position to buy one's dream car with cash, there are many benefits and reasons to consider the range of car financing options available at companies. We put together further information and benefits around financing a new, demo or used vehicle with company. Buying a car on finance versus cash. When comparing buying a new or used car with cash or finance, many people may feel that buying a vehicle on finance is a very sensible option. This is largely thanks to the range of finance and insurance options are available. Demo and used cars so that our guests can buy the car of their choice. The finance and insurance options available from companies are designed to ensure a smooth car buying experience. Is simple and convenient, and not only avoids the need to negotiate the price of the vehicle, but then pay thousands of dollars in one transaction. The company's team understands that many people may be wondering, if I have funds readily available and can pay for the car outright, how can I afford to buy the car on finance and pay the financing costs and interest for years to come? But why would I consider? If cash is available, how can this be a decision that requires more consideration? Well, this video will provide further information on why buying a car on finance is a better option. There are many more benefits than many people may realize. 1. Opportunity cost. Let's say a car is purchased with $40,000 cash. Congratulations. That person is the proud owner of a great vehicle that will be theirs for as long as they want. While the happiness sinks in, they have to consider the opportunity cost of what they just spent. By using the entire $40,000 available to them, this person can no longer use that money to make any other investments. Plus, they've given up the interest they could have earned by keeping that money in their bank account for a longer period of time. In some instances, there may also be tax benefits if the vehicle is purchased on finance and used for business purposes. This is thanks to some people being able to claim tax benefits as a result of the interest component on their loan facility. 2. Covering the cost of ownership. A fundamental problem with buying a car entirely with cash is that it does not take into account the total cost of ownership of the vehicle. Let's assume a potential car buyer is a retiree who is choosing to downsize and may rely on a pension for his income. If they decide to use the available funds, thanks to downsizing, to buy the car with cash outright, they no longer have that cash set aside for ongoing ownership expenses. When purchasing a vehicle, you need to consider other ownership expenses, such as fuel, license costs, insurance costs, vehicle repairs, tire replacement and roadside assistance. Add all these things up and research has shown that 5 years in a major city like Adelaide can cost you more than $16,000. This is approximately 50% of the purchase price of the car, which was not accounted for when deciding to pay in cash. If a car buyer wanted to purchase their vehicle on finance, they would repay the loan over the stipulated loan tenure and would not be required to pay the entire amount. This gives them the opportunity to consider the total cost of ownership over the period they own the vehicle. Budget accordingly and be prepared for some of life's additional surprises. 3. Room for upgrade. Unlike buying a home, cars usually depreciate in value. If homeowners want to upgrade their home, once its value increases they can sell it and buy their next, possibly upgraded home or use the extra cash in some other way. In comparison, most cars other than classic cars, which are an entirely different asset class, face depreciation. This is one reason why car buyers cannot rely on the resale of their current car to support the upgrades needed for their next car. Let's say a vehicle was purchased outright with $40,000 cash available to the buyer. In 3 years, the car may depreciate by more than 50%. When the car owner decides it is time to sell the car because they need to upgrade, they manage to find a suitable buyer who is appraising the car at 60% of its original selling price. While this offer may be better than 50% depreciation, it is still a loss of more than $16,000 from the original price paid by the current owner. If this person was relying on money from a car sale to buy their next car, their budget is significantly stretched. With finance options like Companies Access, car buyers have peace of mind knowing what the guaranteed future value of their car will be. Companies Access offers individual and business customers a new way to buy a car, allowing car buyers to choose their preferred vehicle. Choose the deposit, if any. Select the loan tenure and the total kilometers they want to travel, can hope. The company's team will then calculate the guaranteed future value of the vehicle and the monthly repayments will be calculated. It's that simple. The GFV of a vehicle is based on the length of the loan tenure and the number of kilometers driven by the buyer so that they know what it will be worth if they decide to sell it in the future. 4. Going beyond the stated budget. As a kid, when you had $10 in your pocket, what was your budget to buy yourself lollies or chocolates? There's a high chance the budget was less than $10 because you didn't have access to credit or financing. Car buyers do not need to limit the car options available to them based on the cash budget they have. Companies has multiple finance options available to help buyers purchase their dream car. With this in mind, car buyers may find that their $40,000 in cash is only enough to purchase a mid-range car that may not suit their current circumstances or lifestyle. However, if they decide to purchase a vehicle on finance and use a portion of their available cash for a deposit, they can significantly increase their options, which will enable them to consider a more premium vehicle which a better fit for their lifestyle and needs. Company's team has years of experience assisting guests to ensure a personalized loan is offered, taking into account specific budgets, flexible rate loans, flexible terms and competitive interest rates. Happen. The best part is that it is conducted at the time of purchasing a new demo or used vehicle, making it hassle-free. 5. Build a credit history. It is also important to consider the benefits of financing a vehicle through our range of finance options to help build your credit score. If a car buyer is young and purchasing their first car in their name, they should consider a car loan, even if they can pay in full cash. This is thanks to the car loan, which translates into expanding their credit history. During the term of the car loan, independent credit rating agencies will then observe your timely payments and increase your credit score. This increased score can later help them get other personal and business loans in the near future, possibly at a lower interest rate. So far, we hope we've given car buyers a lot to consider and a greater understanding of the many benefits of financing a vehicle to their individual circumstances and aim to help them purchase the car of their dreams. Now we are talking about benefits of buying a car on finance. Buying a new or used vehicle is a big investment, and depending on your financial situation, you can either pay for it in cash or get finance through a lender. Every year Australians use billions of dollars to finance their car purchases, with 90% of all vehicle sales arranged through finance, and the average car loan size in 2020 being $31,738.40. With obtaining finance being the clear preferred option for Australians. This isn't to say that paying with cash doesn't have its pros and cons. This involves a simpler process and greater flexibility on ownership. But it also comes with drawbacks such as limited vehicle choices, due to budget constraints, and eliminated savings for other investments, or emergencies. So which is right for your unique situation? Pay for the car with cash or get finance? We're here to help. So let's learn about 6 key benefits of buying a car on finance to aid you in your decision-making process. 1. You can borrow the entire amount of the purchase price of the car. If you need a car quickly, a vehicle loan means you don't have to wait until you've saved up all or even part of the money. If the monthly finance repayments are manageable, car finance is a good option. You can also reduce your monthly repayments by extending your loan term. Although this means you'll pay more over the life of the loan. You can drive away in your new car within the time it takes to get finance, pre-approval, and have the dealer prepare your vehicle. 2. Expanded choice of vehicles. You may be tempted to buy a used vehicle to avoid taking out a loan. But in the long run, this is not always the most cost-effective option. Used cars break down more often, sometimes requiring costly repairs and more frequent maintenance. A car loan can help you purchase a more expensive vehicle than you might be able to afford upfront with cash or even a new car. That is less likely to require expensive services/repairs. Not to mention, many new cars, especially those with electric/hybrid technology, can have huge fuel savings over the long term. 3. Car finance can be tax deductible. Vehicle-related expenses account for around 40% of all work-related tax deductions. And it comes with extra perks if you buy a new car with finance. For example, with a chattel mortgage, you may be able to claim the interest payments as a tax deduction. Similarly, with a finance lease option, tax deduction is available for lease rental payments. You may be eligible for the Australian federal government's Instant Asset Write-Off scheme, which applies to both new and second-hand equipment under $150,000 and allows you to claim an instant deduction for the business part of the asset. A quick guide on the most tax-efficient way to buy a car and buying a vehicle for your small business. Things to consider. 4 important things. 4. It helps you establish a positive credit rating. When you borrow money for any circumstance, including a car loan, the lender will check your credit history. A successful loan application and responsibly repaying borrowed funds over the loan term shows lenders that you are a relatively low risk and can improve your chances of being approved for credit at a better rate in the future. This has been more evident in recent times with comprehensive credit reporting on a national level. Previously, your credit report only showed your bad credit behavior such as defaults and other credit violations and bankruptcies. Today's lenders look at your comprehensive credit report, which also includes positive information like your repayment history. So if your credit report or credit history shows that you manage your debt well, for example with a successfully repaid car loan, then it can help build your credit rating. This is especially helpful for people with thin credit files, young people or those still living at home, or those with damaged credit histories. Improving your credit rating means it will be easier to get approved for future loans, whether it's for a car or home, and often at a lower interest rate. 5. Benefit from market competition. Another advantage of getting car finance is that there are many lenders in the market, each of whom is vying for your business. While it can sometimes be difficult to source a small business or personal loan, car finance leasing or business car loans is a more competitive industry and allows you to obtain a loan with interest rates and loan terms that fit your particular financial needs. Work for the situation. 6. Frees up business cash flow. If you are buying a vehicle for your business, another benefit of getting car finance is that it can help you maintain much needed liquidity, especially if you are just starting out. Most business owners face significant cash flow problems when starting out, and these limitations can make it very difficult to purchase a car outright with a lump sum cash payment. By choosing to apply for a business car loan, you can enjoy the benefits that come with owning a car, as well as spreading the cost of that vehicle over several years. If you are buying a car for business purposes, there are several finance options available to you. One of these is a hire purchase agreement, where you pay for the car in installments, and you will have total ownership of the car by the end of the repayment period. Typically, you will pay an initial deposit which is then followed by regular, often fixed monthly payments. Another popular option is a chattel mortgage, which works in a similar way to a fixed-rate conventional mortgage, so your car will be used as security against the loan. If you enjoyed this video and want to learn more about managing your finances wisely, don't forget to hit the like button, subscribe to Finanso Grow, and turn on notifications so you never miss out on our latest tips and tricks. Share your thoughts in the comments below about which habit you're planning to change first. Until next time, keep growing your finances and yourself. See you in the next video.